Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 165 for the 2nd of December, 2024. I hope you're all well. I hope you enjoyed the weekend and ready for yet an interesting week as we start the last month of 2024 already. For those of you joining us live in the room, if you could just confirm that you can hear my voice and see the slides, that would be great, just to make sure the technology is working in our favor before I launch myself into it. For those of you joining us for the first time, the Monday Market Update is literally just that. Okay, it is just me doing a quick run through over the next 30 minutes, looking at strength and weakness within FX and indices markets, looking at some charts of interest. Today we'll look at some defense stocks, and then a look at the live markets themselves. It is, as I said, I just try to cram it as much as I can in the next 30 minutes. It's a race through. There are no trade signals. It's not a recommendation service. It is just literally a market update of what I'm looking at, which may or may not be of interest to yourself in your own trading journey. As always, you're very welcome here. Just remember that you are always responsible for your own trading decisions. And something that might be of interest to you is that as part of the Black Friday deals, well, in fact, actually, what's happened is I've made the VTP Stage 1 online. I've made that now free for all. So about a week or so ago, I had my second anniversary of being declared cancer free. Okay, and I've been very grateful to the help and support that people have given me. And one of the ways I can start to help other people is basically giving them the opportunity to change their lives, to get better at what they want to do. So the VTP Stage 1 online is free for all, and you can see there either on the bit.ly code VTP free or on the QR code, and you can access that if you so wish. Also, the Togs Trading Podcast continues, and we actually have our own website now, togspod.com. Okay, normally Thursday we release the next episode of the podcast, but you can catch it on the also the website, either on togspod.com or once again just look at the QR code. And we've got a final bit before we kick in. If you want more education, then every Monday at the moment, I am providing a webinar, 2 o'clock London time for active trades. And this week's is all about how to add to our trades. How do you go from taking a trade towards building a position? You can either register on their website or once again, register through the QR code that they have there. All right, that's enough of that. Let's focus on what we want to look at in terms of the markets and trading for the week ahead. This is the STAM, which is what I sort of talk about in stage 2 of VTP, and it's the work I do at the weekend, my own model to basically identify where's the strength and where is the weakness within financial markets for the week ahead. Getting an understanding of the strength and weakness allows me to allocate my time, energy, and resources more effectively, because really I want to be buying strength and selling weakness. Okay, so where are we? What's going on? What we're being told? All right, so we are into week 49 of the year. Here we are for the 2nd of December. Where is the strength? Where is the weakness? Well, we've had a bit of a turn up for the books, with actually just based upon Fridays, a little bit of a bounce there. Okay, in terms of Japanese yen. So, whereas just over a month at the start of November, it was down there in the bottom of the pile, we've had a little bit of bounce. A lot of that just an element of that is the the lack of Americans operating in sort of Thursday and Friday of last week because of Thanksgiving, but also some of the news and data coming out of Japan, and also looking about rate hikes there. Okay, and the likelihood of them over the next few weeks and months. So that has got people a little bit giddy, a little bit excited, and that powered the Japanese yen to the top of the pile. I will be interested to see by the end of this week whether we continue in that particular vein, especially in a week where we've got an awful lot. Well, we've got quite a lot of data at the start of the month rather, but also we've got a lot of US data, right? So even like we've got PMIs, okay, manufacturing PMIs this afternoon, all right, then you've got services PMIs on Wednesday, you've got JOLTS job openings tomorrow, you've got the ADP jobs on Wednesday, then of course on you have Thursday, you've got unemployment claims, and then Friday, of course, is non-farm payroll. So There's an awful lot of data coming out giving an indication of the state of the US economy, all right? And so people will be, naturally, they'll be keen to sort of see how those numbers come out, especially compared to the numbers that we saw in November, which were a bit of a damp squib due to some of the data being skewed by the kind of floods, etc., that they had in parts of the US. So, nonetheless, a lot of data will come out to give people an indication of what kind of economy Trump is going to be inheriting, and of course that will have an impact on dollar. And we'll look at the dollar in a moment, but it's still basically holding up there as kind of top of the pile, even though we had a bit of a sell-off there last week. As I said, though, last week is a bit of a strange week. It's a bit of lots of data, especially Wednesday, but then of course Thursday, Friday again. A lot of the big boys are out of the game, etc. So, this today will be a little bit nuanced, and then invariably as we get stuck into the American data and edge our way towards non-farm payrolls, okay, we'll start to get a little bit of a clearer vision. At the other end of the extreme, and it's something that we're going to look at a little bit more in depth, is Euro has dropped to the bottom of the pile there, okay? So it's 8 out of 8. Not a massive surprise, really. You've heard me talking about actually how it's been struggling, for the last few months, and that was just accelerated after the US election. Okay, we just pretty much, the initial reaction was to basically go long the US, short the UK and EU. All right, that's that, and we've seen that. You can see that in the price action itself, how that's played out. But interestingly, as we will look at in a moment, how that has impacted also on European indices and European stocks, because we're going to look at US versus EU defence stocks in a moment in terms of the charts of interest. But certainly looking at there, Euro's weakened. Of course, there was more bad news out of Europe over the weekend with regard to France and their yields. Okay, so there's the sentiment is very weak, right? People are very bearish on Europe for all sorts of reasons. But bearish euro has basically sort of just helped one or two of the elements of just basically gave sterling a little bit of support last week. Once again, as I said, bad news about Europe. The Americans sat eating turkey, all right. Sterling had an okay couple of days, Thursday, Friday, all right. But as I said, whether that's just the absence of competition, more so than actual genuine moves by sterling, we will wait and see over the next day or two. And what has kind of interested me as Aussie has weakened considerably, Kiwi remains a sort of becalmed, and Canadian dollars mincing around in that sort of fourth and fifth slot at the moment, and Swiss just remains just outside of the top two, which is of interest to us. Okay, when I look at what a couple of the charts today, as I said, even though Swiss has been there, what we've seen to start, okay, has actually been a bit of a Swiss weakness there this morning to start the week. Pretty much, everything has weakened against the dollar. As I said, the dollar numbers for last week are a little bit skewed because of the Thanksgiving. In the old days, what you would normally see is that having had a fantastic long weekend, we would see American traders coming in and being very bullish about themselves and about the US, and that would sort of, that strength would seep into dollar and indices. It doesn't work in the same way as that, but I'd be interested to see what happens when we look at those American markets open in in just about sort of just under 2 hours. So with that, what we did see is, of course, that we've had Dow was returned to a strategic buy, as has the Russell. Okay, that's with that. We see that as FTSE, but I'd be a bit wary about that as we look at the charts in a moment. But the Aussie is also very strong there. Okay, the ASX, oil is a strategic short, gold tactical short, silver tactical short. Okay, silver in particular, I could understand that. I think it's just sat on 30, which we'll look at in a moment. Bitcoin remains bullish. Okay, it's had a little bit of a frantic week or two. Literally tickling the soft underbelly of 100k, then rolling back down to about 91, 92, and then bumping up again. All right, so no surprise that there's some shenanigans going on there. So that's, as I said, just a little bit of a look over the STAM, all right, in terms of where's the strength, where's the weakness in FX indices and commodities markets, and that helps me sort of start to plan my week ahead. Now let's have a look at charts of interest. And as I said, we're going to focus today mostly on defense stocks, and in particular, US stocks and EU stocks. So, as I just said there, talking about the STAM, post the Trump election, what we saw was, as I said, basically short Europe, long the US, and that was basically, you could see that in the euro dollar, you could see that in European indices, you could see that in the American indices and ETFs, sectors, etc. It was very much bullish US, bearish Europe. The one place where it hasn't been seen or has followed through, has actually done the opposite, is actually when we look at defense stocks. So what might be seen as one particular view of that, and people may differ on that, is that Trump's not really a warmonger, and invariably, he's already sort of expressed his wish that he wants the trouble in the Middle East to sort of sort itself out. Although that might differ after the weekend we've had with the sort of the kind of collapsing of Syria going on at the moment. But he said in general he wants the Middle East, on continuing sort of warfare that's going on there, to draw to a close, and he also wants Ukraine and Russia to start to come to a some sort of facilitation, whatever that might actually be. But of course, with that, if he's not a warmonger, that has an impact on defense stocks. And so what we have seen across quite a few of these US defense stocks is, as you can see, is a little bit of a rollover. Now, this is Lockheed Martin, huge major defense company. And one of the reasons I looked at this is, I kind of put it on my Twitter and on LinkedIn last week, is that a week last Sunday, I think on X, I mean, I know I'm supposed to call it X, but everyone still calls it Twitter, is that Mr. Musk made some disparaging comments around the F-35, of which the Lockheed is a Lockheed Martin product, and probably I'm sure someone will correct me if I'm wrong, it's probably the biggest defense collaboration project in the world. All right, the F-35, and sort of made some disparaging comments about it, all of which had an impact of basically gapping down and dropping the price of Lockheed Martin last week. Okay, which lots of people focused on, but really what we can see is that we had already turned in Lockheed Martin just in front of the election. Now maybe this was a reflection that basically when Trump, they realized Trump was going to win, basically defense companies were likely to lose out initially, and that's what we've seen. And so from being up here at $620, we're now back trading sub $530, and I wonder whether we go back to sort of the big round number of $500. Okay, there's a huge big imbalance there. I wonder whether we work our way down to there, okay, in terms of people sort of having a little bit of being dismissive of defense, or rather US defense stocks, and that's what we can see there. And certainly that's a huge big bearish key reversal, bearish engulfing candle that ended that on the weekly chart. Now, just as an aside of that, one particular you might say defense stock didn't do too badly. UMAC, Unusual Machines, because Mr. Musk's comments were that the F-35, is a bit of a goose, but drones are the future. And so Unusual Machines, who are a drone manufacturer, US one, well, you can see for yourself, they had already started to sort of tick up from a base of around about $2. All right, but then last week, they gapped open up to like what was about $5.50, and then initially I think they went to about $11.50, and then they finished the week, as you can see there, just tickling the soft underbelly of $19. That was quite some move. I think the bigger picture and the bigger story is that we are going into a world where Trump and Musk's comments will have impacts like this on markets. Those of us who traded through Trump V1, his first presidency, can remember that and can understand how that would happen. But if you're new to your trading journey, this is something that basically we're going to see increasingly. And it for me, the message you take away from it is that your risk management becomes even more important in a world where a couple of lines from Trump might actually just completely make markets pivot. So you just need to be managing risk as best as you can, which there you go. You might learn that on the VTP stage one. But anyway, that's a chart there, isn't it? That's quite some chart. And if you were in that already, well, fair play to you. I wish I was, but I wasn't. But we all look at a chart like that as quite something else. But anyway, back to the story. American defense companies. Another one here. This is Northrop Grumman. Okay, Northrop Grumman here. Now, of course, me being an old duffer, when everyone talks about Northrop Grumman, what I'm particularly remembering is, Northrop built the B-2 Spirit bomber. Grumman built the F-14 Tomcat. They were very well aligned with the U.S. Navy in terms of basically putting an awful lot of aircraft on American carriers. So E-2 Hawkeyes, A-6 Intruders, F-14s. If you're a bit of a fast jet aficionado or a spotter, then you'd understand that. But Northrop Grumman is still a major defence company, maybe not as well known in terms of their numbers, their name being in the eye as they were back in the 80s. But anyway, still looking at this chart, and we can see that earlier on, okay, sort of last year, we had always had a kind of a level of support around about 420 there. As always, I love a confluence of events. Here we had a double bottom, okay, at a level of support at the weekly 200 period moving average, all right? Confluence of events, 2 to 3 to 4 things coming together in one time and place. That's what you're looking for. And as you can see, we rallied from around that 420 area through 500, okay, through 500 up to 550, which was where we had seen prices triple top, okay, a few years ago, back in 2022. But a bit like we just seen with Lockheed Martin, already in front of the election, we can see that it topped out here. This is a big bearish rejection candle, even though it's a bullish close, it's a rejection candle. You might call it a false breakout. However you label it, it's fine, but it's clearly rejecting that $550, doesn't like it. And as you can see, it's kind of rolled its way off there. And then you can see when the election was, because that literally did just, you lost what's that, $40-50 in a week there, okay, on Northrop Grumman, and it's drifted its way down there since. Now you're looking at, will it basically find support about 480? We shall see. We shall see. We'll see what comments, Trump goes through, whether also his nomination for defense secretary has whether that actually comes to anything. We shall wait and see. But it's just another indication that we've seen, as I said, is that many of those American defense stocks in the last couple of months, having had a grand run, they've really come off over the last sort of 2 months, etc. So despite everything that has been going great in America over the last 2 months, etc. Whereas if we look on the opposite side, of course, as you've heard me talk about for the last month or two, Europe's in a shocking state. The EU, the euro itself, they're all nobody's happy and stuff and what have you. But what we can see here is this is one of the best stocks that we've seen over the last couple of years, and is probably one of the elements of that has kept the DAX flying high. And this is Rheinmetall. They basically make artillery shells. There has been great demand for artillery shells, okay, over the last couple of years, all right, because of what's going on further east in Ukraine and Russia. You can see for yourself that has been a fantastic, move, hasn't it? Fantastic trend. However, we had got ourselves into a little bit of a block, okay, this year, all right. We had seen that, okay, between about 460 and 560, 560 euros, 460 euros. You can see that there. But actually what's happened is as American defense stocks have fallen, and of course, as Mr. Trump's views on NATO and European contribution to defence start to come to the fore, well, what we have seen is that there have been a couple of European stocks have actually had a nice little bump off that, okay, and this is one of the prominent ones. Rheinmetall. People always need artillery shells, especially when you're going through thousands of them a week further east. So you can see for that Rheinmetall, okay, you might say it's pivoted around 500 euros, but in that range between 460 and 560, and has now continued up there, okay, on that particular run. Another one that's sort of broken out as well from that is Leonardo. All right, ostensibly an Italian defense manufacturer, although they have lots of sites and operations in the UK. They were the ones. I probably got this wrong, but they were the ones who I think bought Westland helicopters when we had them in Yeovil and stuff, etc. But I could be wrong. I'm sure someone will correct me. But ultimately, a European defense manufacturer, and once again, had done very well out of the Ukraine war, but had kind of got into a little bit of a block there, right? Okay, a little bit of a range there, 20 euros, okay, 20 euros to 24 euros. But once again, you can see, okay, like Rheinmetall, as the American defense stocks have waned, European defence stocks have kind of lifted as I think European defence manufacturers have realised that, or rather European politicians have realised they're going to have to put their hands in the pocket and start paying towards defence, and not expect Mr. Trump to basically foot the bill. And actually, that's one thing I agree with Mr. Trump on. That's one thing I would agree with him on that, and hence why we have seen some of those companies do well. One that it's probably one European one that hasn't done so well is Qinetiq. And I only mention this, and in the interests of full disclosure, I've quite a few friends who work for one variation or another of companies owned by Qinetiq that come under the umbrella. Listen, Qinetiq, you can see really what we were looking for. We've been in a range for a long time, all right, between about £3 and £4 there. You can see that over the weekly over the last few weeks. But we had a breakout early this year. When we'd broken out through the kind of £4 and actually peaked out at 4.90 there. And then what did we print? Another bearish rejection candle there. There's a bit of a nice Vulcan setup. Some people might actually even say there's a bit of a kind of a double top, all right. But having got as high as sort of like £4.90, what's happened is we've seen it starting to roll over and making lower highs, lower lows, and have traded down to 4.15. Okay, I'd be interested to see, as I said, is this a place where it'll find support? Okay, it's got as low as there. The weekly 50-period moving average, that can support the big round number of £4 is there. So I would be watching Qinetiq over the next couple of weeks. Maybe this is where it finds support. Okay, confluence of events again. Maybe there's some indications of increased European defence procurement. Maybe not from the UK. Maybe that's why it's dropped, because they know Starmer hasn't got a clue. But anyway, we'll leave that story for another day. So does it find support, or if it breaks, well then I would be looking at 380 at my next level there. Okay, next level of resistance. So it's kind of an interesting one to watch. But hopefully you got the message there. US defence stocks have waned, but European defence stocks, some of them have done very, very well. And that's probably a reflection of the geopolitical sort of environment that we're going to find ourselves in over the next couple of years. All right, that's end of charts of interest. Let's switch across and have a look at the live market. So if you just bear with me a moment, we'll just switch across. Okay, so hoping that you can still all hear me, hoping that you can see me. This is a profile of some of the major indices, okay, and oil that I look at. So I've got Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell, then FTSE, Nikkei, DAX, and oil. Oil is kind of just farting around really between about $67 and $71 there. Okay, that's I don't see anything there to really excite me. What is of interest is that Dow closed at all-time highs again, as did S&P 500. The Russell it didn't close, but in many ways it was a close at its high. Okay, it had traded higher there, and even the Nasdaq is falling its way there. Okay, so there's a lot of bullishness going on there. Once again, I'll be intrigued to see if that follows through at the end of this week with the jobs numbers, and as I said, as we get more towards inauguration and Mr. Trump has to come out with some of his ideas and thoughts on what he's looking for. But that's all bullish there at the moment. Okay, that's all bullish, and so, as you hear me say to new traders, if there's a good trend in place and it's bullish, why would you look to fight it? What's the point of fighting that? Okay, don't try and fight it. One of the interesting ones that are a little bit closer to home, then of course, is the DAX. So what we have seen, despite me talking about the euro weakening, French yields, the German political situation, the German economic situation, etc. That has not stopped the DAX from today trading its way through to its highs. And we were looking at this last week in terms of, if I just go here, let me just try and draw in. Let's get in. DAX has been in the dominant long-term trend had been a bullish one, but when you start looking at the kind of 4-hour charts, we had certainly been in. Excuse my drawing; it's not fantastic. I'm a better trader than I'm an artist, but hopefully you get the idea. We've been in a dominant trend, but certainly for these last few weeks, what we had seen is we had been sort of just trading our way down, and when you look at this, you're always trying to work out, is this a retrace? Is this a reversal? Okay, is it just a pullback? And that's why in this case, you're helped by the fact that we had a very strong resistance line here, very strong resistance line for our. And once we had broken through at the end of last week, you can see we'd ploughed our way through. Okay, so we will look back on this as being effectively probably a bull flag, or a bull flag in a bullish trend, but it's adding nice price action. Okay, you can see there in the weekly chart we had talked about it, lots of wicks to either side. Okay, so indecision really, but then Bosch. Once we'd got that bullish pin bar, we'd kind of worked our way through over the last week, and then this week we are carousing our way through. Now, admittedly, of course, this is Monday. It's the first trading week of the week, of the month, etc. First trading day. We'll have to wait and see how that particularly plays out. Especially as I said, I don't think there's any really major European news this week. I don't think so. But French yields is going to overhang with everybody's sentiment. Of course, all that American data. If all that American data is super strong, I'll be intrigued to see, whether that the flow of capital switches back to the US. But certainly, that's what we're looking at there. Okay, you certainly have not seen that through in the FTSE. FTSE bounced nicely off the 50. If you remember, we talked about it post-budget. We come down to, it's an inflection point. So just as we've looked at some of those charts, okay, is that we are 8,000, 50 period moving average, all right? I wouldn't be calling that necessarily a rejection candle because of the wick, the size of the wick above it, but nonetheless, there was, it was indecision there, okay? More of a doji indecision candle, confluence of events, and you can see we've bounced up, and we're above the weekly 20, all right? So, I'd say that's bullish, but compared to what we've just seen in the DAX, what we've just looked at in American indexes, FTSE still remains. It's a bit of a laggard, isn't it? There's nothing really terribly exciting going on there that's making people wanting to go heavily long in the UK. Right, because of time, let's have a little quick flick through. So as I said, oil's faffing around, gold, last week it wasn't an inside candle, but it's a bearish candle. If I look at the daily chart, we can see, we really got a little bit kind of affected by the kind of the trading into the start of last week there. On the daily chart, gold, yes, it is. The dominant trend is still to the upside, but I will be looking to see how price reacts to this 50. If it can't break over it, and invariably, if we start to see it flip and start to act from here, where it's dynamic support being dynamic resistance, well then, it wouldn't surprise me if we drifted down to the recent lows. That's what I'll be looking at on gold. Silver in the weekly chart, all right, has just, having pumped its way higher, it's back to 30, all right? It's back to that big round number of 30, which is acting as support at the moment, but a bit like gold, all right, is it going to roll over? If it does, then I'd be looking for, if it breaks 30, I'd be looking down to 28, where we have had support before, and that weekly 50s there. So that's what I'd be looking at there on the on silver. As I said, Bitcoin, we had a week of just tickling the soft underbelly of 100 grand. Last week, we've printed that as an inside bar, pin bar. All right. My natural inclination would be for it to pull back and then see if that will give it the strength to assault that 100k number. But a lot of that is to do with the US dollar. All right. So we'll have a quick look at what we'll do. Unfortunately, we're going to overrun a minute. We'll have a quick look at US dollar, quick look at euro, quick look at sterling to finish us off. Okay. As I said, I'm always trying to just cram in as much as I possibly can, hence why I'm racing through it a bit, but hopefully it just helps give you a little bit of insight. All right. So this is my dollar profile chart. Let's have a look at the weekly chart. Weekly dollar index, absolute tear, but it wasn't last week. All right. Some people would look at that as maybe a little bit of a reversal candle or an evening star formation. Certainly, the fact that we closed low and back down from the highs of the week or two before, would give people moments for concern. They'll be having a look at that. If you go to the daily chart, you can actually see the last few days is a bit scrappy. No surprise, all right, after Thanksgiving and a half day on Friday. So as I said, we've got a lot of American news coming out this week. I think we'll either find it'll support us and we'll rally ties, or it'll break us. And I would not surprise me if we went back to about 104. So price action to me is like doubling it. Maybe we'll get, here we go, just looking at the chart here, maybe we get, a head and shoulders pattern there, okay? Maybe we do, all right? And then you're looking at that sort of Yeah, around about 106 as a bit of a neckline. That's what I'll be looking there. If that breaks, okay, then I'll be looking for it to come up, touch, and as I said, back down to maybe that kind of 104.50 area. That's what I'll be looking at the dollar. So let's see if the news is dollar strong or dollar weak. Euro dollar we're going to look at anyway. All right, so I'm kind of happy with that. The yen we can see yen has strengthened against the dollar. You can see there on the daily chart, and we ended last week sub 150. Okay, we'll see whether that carries on, but that is in itself is a story that Japanese yen bumping out to us. All right, but we're unfortunately running out a little bit of time. Okay, overlooking. Let us switch to euro then, because we're interested to see what's happening here. Euro against the US dollar. Bang. It's been in a downtrend. Okay, yeah, it's reversing as the dollar index, but as I said, we'll have to wait and see for a couple of days to see whether that basically is just an arbitrary move. If I look at euro yen, okay, yen has pumped its way to the top of the pile. Look at last week, big strong sell off there. Euro against the yen, euro against Swiss franc is grinding its way down there, right? Interestingly, even though Aussie was weak and euro strong, we had a bullish inside day on the bullish inside week, sorry, on euro against Aussie, which is probably just a reflection of even though euro is weakening, all right, Aussie is weakening just as fast. Euro against Kiwi dollar, all right, that is holding up there. It's sat on the weekly 50. I'll be waiting to see if that breaks. That can, as I said, give us an indication that even Kiwi dollar is weakening a good deal against us. Let's finish off with cable. Apologies, as I said, overrun a little bit, but as I said, always just trying to get as much as I possibly can in for people. Always finish with sterling, all right, and having a look. Cable, okay. So, as we said, bang, you can see what's gone on there. Sterling has dropped right from top of the pile to fourth, okay, whereas the US dollar climbed. Last week was a kind of, as I said, it was a bullish week, but as we just saw on euro dollar, a lot of that is I think to do with kind of a sort of major dollar players Thursday, Friday off. Will that follow through? I don't really know. Maybe it comes back to the weekly 250 and then you turns that into a decision point, breaking that kind of trend line. But it's as I said, cable is more a reflection of what the dollar wants to do, more so than what sterling wants to do. We just looked at yen strengthening against the dollar, yen strengthening against the euro, and there it is also strengthening against sterling. And this has been coming. Just look at the price action there. Indecision, lovely inside bar, pin bar, and then just domino candle, bearish pin bar. Now beneath the 50, okay, I wonder if we pull back up into this sort of 20-50 zone and drop our way down. But that is giving an indication there. That is PO20, tactic number 3 from VTP stage 1. You can see that has been the daily chart, pound yen for the last month. It's been, sterling weakness, yen strengthening. Okay, that's what it's there. That's what I'm looking to. That's what I'm always looking to trade. Pound Swiss is a bit of an interesting one because Swiss and pound, they're in the middle of the play, but you've heard me talking about it. It's just price has just been coiling up for weeks here, pound against the Swiss franc. When the moving averages and the price are coiled up, that's an indication that we're a bit flat. But then we're looking to see, is it going to break out of that? Last week was a bit of a pin bar, okay, inside bar, pin bar. Already this week we kind of had a little bit of a bump there, but it didn't hit my trigger and stuff. But it's building within this kind of coiling up formation. Let's finish with euro against sterling. Okay, so euro against sterling, you can see weekly chart just drifting its way down, not in a terribly pretty way. And certainly for the last couple of months, there's been nothing really easy or pretty to trade on, let's say, the long-term swing. But, all right, we're trading here, 82, 89, but 83 has been a kind of a level in the sand. And, as I said, this is only the first trading day of the week. I'll be intrigued to see by the end of this week, do we get, where we're trading there at the moment. Certainly this morning session, this is the 30-minute chart. We broke out and moved beautifully down there. Okay, it was a lovely breakup, but then we double bottomed and we've rallied our way up from there. Okay, so as I said, there's still that euro weakness there. Okay, and sterling is weakening. It's you can see for yourself on the weekly chart that is not that's not a terribly easy chart to trade there. Okay, there are easier things to trade. So as I always say, no need to be a hero. You don't need to fight the market. Just try and find the easiest place for you to surf with the market. Okay, there we go. Let's just draw it to an end there. I apologise that we overran a little bit, but as I said, there's lots there going on that I wanted to share with you. As always, I'm just trying to race through and pack in as much as I can in a sort of 30 odd minutes. I hope you found that useful. I hope that's given you a bit of interest and a little bit of something to look at for the week ahead. As I said, I'll be doing a session for active trades at 2 o'clock, and then if you're joining the VTP, every Monday at 7 o'clock is the opportunity to join the weekly coaching call where I go through part of the course and have a look at the live markets, a little bit like here, but I don't have to do it in such a hurried manner. As always, I wish you the best of success for your trading week. Okay, hope you have a great trading week. Okay, there's a lot coming out, so make sure you keep your powder dry and manage risk. And I look forward to speaking to you soon, everybody. Cheers.